Hey, my name is Connor, and welcome to Crypto Empire, where we dominate the crypto market. After the fall of FTX last week, we've been discovering a new piece of collateral damage every single day from that crippling event to the crypto industry. More recently, we found out that Blockfi is filing for bankruptcy. Today, we found out that Genesis Global, which is a very large crypto institutional lending platform, has halted all withdrawals on their platform. Also, the New York Times and other mainstream media outlets are writing puff pieces about SBF and FTX, making them look not really as bad as they actually are. They're mentioning no wrongdoings, basically, which is absolutely absurd. And we have U.S. senators and regulators moving forward with the regulations that SBF went ahead and wrote out for them, which again is completely absurd. So in this video, we'll be hopping into the charts and discussing what all of these negative events mean for the prices of Bitcoin and altcoins. And we'll also be taking a look at all the collateral damage caused by the FTX collapse. So if that does interest you, be sure to stick with me until the end of this video. If you're brand new to Crypto Empire and you're already subscribed to the channel, go ahead right now and smash that subscribe button down below and turn on all the notifications so that you don't miss any future videos. And without further ado, let's get right into it and let the gains be with you. So to start off this video, let's hop right into the Bitcoin price chart and go over what you should be preparing for next. Now, I'll make it very clear, there's no reason to be bullish on this market. This is a very bearish market, very bearish press, very bearish sentiment. But it is possible that the market does actually push up from this point before the next major nuke down lower that will most likely form the bottom of this bear market. Now, if you notice on the screen right now with my chart, the Bitcoin price is coiling up in a symmetrical pennant formation. So two things can happen from here. Either we break up to the upside or to the downside. There is a lot of short liquidations. A lot of people are short on the market, and all their liquidation prices lie from around the $18,500 mark up to around $20,000. All right, 20K would be the retest of this bear flag breakdown, which also has some confluence there. But what you should know right now, with the Bitcoin price coiling up in this symmetrical pennant, is you should be prepared for a possible short squeeze here. Notice we are bouncing from the bottom support of this pennant. Now, if we are to push up higher, the main resistance on the chart is going to be at around $18,500. If we are to get there, the first thing that needs to happen is at least the bare minimum, an hourly close above $17,160. Notice that is the current horizontal resistance level on the chart. We have wicks up into the area. It is a very obvious area on the price chart right now. So if we are to push up higher, the first thing that needs to happen is for the Bitcoin price to actually go ahead and close above $17,160, bare minimum on the hourly price chart. If that happens, I could expect to push up to $18,000. From there, 18.5K. We'll take it level by level, but be prepared for this possible short squeeze to hunt out the liquidation levels above before nuking this thing down to lower lows. Now on the other end, we want to watch if price wants to just break down and not even short squeeze. If that were to happen, we just want to watch and see if these key lows are taken out. First one is going to be over here at around 15,800. We want to look for a lower low past this level. And then of course these wick lows of the current low of the bear market, which lie at around $15,500. So with the price bouncing from this lower trendline support, first thing that needs to happen if we're going to break down is to lose this support. Then we go test this demand zone. Again, take it level by level. Ultimately, with this next sell-off, heading back to the daily price chart, I would expect sub 14K, most likely around the $12,000 level. Reason being, if we go to the weekly price chart and we take a look at the weekly over here, just looking at this chart, the real candle body support comes into play at around 12K, really just a little bit below 12K at around $11,850. Right, we have a lot of wicks higher. You can see this one wick up to 14. So that's why I have these levels marked on the chart, but really the candle body support levels come into play right at around $12,000. So if the sell-off is fierce, which it most likely will be with all the collateral damage that we're still discovering from the FTX collapse, then I would not be surprised to see Bitcoin trade at around the $12,000 level on this next sell-off. So be prepared for it. And I don't want to spend too much time looking at the technicals right now. I do want to spend time talking about this collateral damage from the FTX collapse and what it means for crypto right now. So first things first, Blockfi filing for bankruptcy. FTX went ahead and ruined them, right? So if you had any money still in Blockfi, I hope at this point you didn't have any money in Blockfi. You should have taken action a long time ago. Back in May when Celsius was collapsing, you should have gotten all of your money out of these crypto lending platforms that pay you interest. All right, the time to get your money out was long ago. So Blockfi going under right now, November 15th, which was yesterday. So we had plenty of time to not get hit by this one, but it still will drag the market down with this bankruptcy. Moving on, Genesis Global is halting withdrawals, citing an unprecedented market turmoil because of the FTX collapse. So we can read here, the troubled firm is also acting as the liquidity provider of Grayscale Bitcoin Investment Trust. This is significant. However, Grayscale over here is saying that there's no reason to be alarmed. Basically, we can go ahead and read this Twitter thread. They went ahead and stated that in the wake of recent events, our investors should know that the safety and security of the holdings underlying Grayscale digital asset products are unaffected. Today, Genesis Global Capital, a subsidiary of Grayscale's affiliate, Genesis Global Trading, announced that it is temporarily suspending redemptions and new loan originations. Genesis Global Capital is not a counterparty or service provider for any Grayscale products. As a result, Grayscale products continue to operate business as usual, and recent events have had no impact on product operations. And they went ahead and said that basically you don't need to worry about anything. This to me is a little bit alarming because every single time a crypto exchange or lending platform has gone bust this year, they always put out a tweet similar to this saying that everything is fine, we're all operational, everything is going as normal, and then the next day it caves in like a house of cards. So watch this development unfold here with Grayscale. Everybody in the crypto industry, when it comes to these big institutional platforms that went ahead and took out loans, etc., they are all in very hot water right now. So we are still only seeing the tip of the iceberg, in my opinion, with that FTX collapse, which is why I think it's highly likely that the Bitcoin price has another lower leg down to these levels. Moving on, there is a lot more. So very shortly after FTX collapsed, we went ahead and got the announcement that the New York Federal Reserve has partnered up with MasterCard, Wells Fargo, Citigroup, and a bunch of other major banks and financial institutions in the US to pilot a 12-week digital dollar concept program, which is very odd when it comes with the timing. Right after the FTX collapse, immediately they want to go ahead and launch this pilot for a US dollar CBDC. We can read here in this article from Decrypt saying US banks launch a digital dollar blockchain pilot. The article says a group of banking institutions, including HSBC, MasterCard, and Wells Fargo, announced on Tuesday, which is yesterday, the launch of a proof of concept digital money platform called the Regulated Liability Network. Members of the U.S. banking and payments community involved in this proof of concept are pleased to be working alongside the New York Innovation Center that is a part of the Federal Reserve Bank of New York. Long story short, they want to launch their central bank digital currency. Edward Snowden saying it begins, right, this is the pilot. The potential of central bank digital currencies or CBDCs has long held the interest of banking officials. CBDCs are digital versions of a state's fiat currency and are similar to stablecoins pegged at a 1-to-1 ratio with a specific fiat currency. So if we have stablecoins, then why do we need a CBDC? One word. Write it in the comment section down below if you know what that one word is. It starts with a C and it ends with an L. Moving on, we can go ahead and check out the last paragraph of this article and wrap it up. They said the United States would not be the first to attempt to develop a national digital currency. China has already begun work on a digital yuan. In September, Australia moved ahead with its pilot project for a digital dollar using an enterprise-grade private variant of Ethereum known as Quorum. And also, before we go ahead and wrap it up, they also mentioned a distributed ledger technology, right? We can see here, according to the group, the platform will use distributed ledger technology, better known as a blockchain, to create opportunities to improve financial settlements. So this is what Quant is. So Quant we already know is primed up for the CBDCs. So yeah, it's good for the banker coins, but really it is quite scary. And again, this last article here should give you a hint on what that one word reason of why they're doing this is. Now moving on, let's talk about the mainstream media articles. New York Times routers, they're all writing puff pieces making SBF and FTX not look like the straight up criminals that they are. Right? Sam Bankman-Fried is a scammer, he's a fraud, he stole billions of dollars of users' money, and they're not really mentioning that in the mainstream media, which is quite concerning, but not really surprising at this moment in time. So this is a opinion article by CoinDesk talking about that, and long story short, we'll just read the last paragraph of this article, which basically sums everything up. So in a real sense, Bankman-Fried never represented crypto. People first realized this after getting wind of his regulatory agenda, which destroys crypto basically, and according to this article, would have eliminated financial privacy, tanked decentralized finance, and built a moat around FTX. And so even if the New York Times wants to write a softball story about a billionaire who inexplicably is finally getting some sleep, doesn't matter, it speaks volumes. Long story short, they didn't call him a scammer, they didn't call him a fraud. And they're saying now he can actually get some rest, which is absolutely absurd. So not a surprise there by the mainstream media. They continue to not surprise us. And talking about those regulations and such that Sam was going ahead and writing for the US, we'll get to that in a second, but I mean, this is really dirty, right? So Bankman-Fried's cabal of roommates in the Bahamas ran his crypto empire, and they dated each other. Other employees have lots of questions. We're not going to get into these details, but look, it was super ugly what was happening over there with FTX, and they are getting, basically protected right now by the press, by authorities. Nothing seems to be happening. So, I mean, we're going to see here. And also FTX, when they went ahead and their exchange got hacked right after it collapsed and they took everybody's money that was remaining, the hacker put all of that money into Ethereum. All right, so they are now the 35th largest Ethereum holder in the world, which is a little bit concerning because if they want to dump that, they will go ahead and dump that. Ethereum is a very liquid asset, so that would really tank the price of ETH and really the entire crypto market if this were to happen. Another reason why it's very possible we see Bitcoin go ahead and make that lower leg down. And if you're wondering where Ethereum could possibly go, $400 to $700 is a safe bet. All right, taking a look at this weekly chart, I have the levels marked out for you here, and there are some down here, like I said, as low as 400. So don't be surprised if we do actually get that. It is definitely possible, especially if the FTX hacker went ahead and he dumped all of this on the market. Now moving on, let's talk about the regulations that I was speaking of. So before FTX collapse, Sam Bankman-Fried was like the best guy in the industry, right? He was working with US regulators to draft some kind of literature to regulate the crypto industry. And the literature that he proposed was not at all the point of cryptocurrency to give you back power over your money as a sovereign individual. Rather, Sam Bankman-Fried, he wanted to have a surveillance state, a full-on surveillance state with money and not give you any privacy or freedom. So even after FTX goes ahead and goes bust and steals billions of dollars of people's money, the US senators are moving forward with Sam's proposed bill, which is, again, not really surprising if you can just look past the curtain a little bit, right, the smoke and mirrors, but it's definitely a little bit concerning. Now, this article talks about the contributions made by FTX to certain political parties and politicians. I'm not going to mention any names, but I'm sure you're already aware, right? Some more donations to local politicians, senators. And what is the effects of this bill that SBF went ahead and proposed? Basically, it kills DeFi. It makes decentralized exchanges illegal, which is insane because we just had a centralized exchange, steal everybody's money, and the guy who drafted these proposals is the guy that went ahead and stole everybody's money. So nothing makes sense here. Really, nothing does make sense. And they want to regulate crypto so that they can go ahead and crack down on, of course, their CBDCs at the Federal Reserve and be able to control every aspect of everybody's bank account. So a lot of stuff isn't adding up right now. And also some more very interesting things. So FTX as an exchange, it had an in-house psychiatrist for traders to go ahead and speak to. Now, the New York Times wrote an article about this in-house performance coach, and it was another puff piece. Okay, we have this Twitter account, Autism Capital, saying clearly how it's a puff piece. And long story short, this doctor, this psychiatrist, this in-house guy, has tons of really negative reviews by previous patients online. I encourage you to do a little bit of research and find those out. But he seemed like a very unkind person that you would not want to be around by any means. And here we have the New York Times going ahead and making him seem like a great dude who was doing a great job. Really insane, to say the least. Now, lastly, we'll take a look at Twitter, and we can see that according to sources, the FBI is going to extradite SBF to the U.S. All right, so that's good. We're going to see if he's charged for these crimes. You know, we have this meme here speaking about who FTX was really, being controlled by. We're going to see what happens here, but regardless, continue to watch all of the price action develop here. Again, it is possible that the prices do squeeze up a little bit higher before that next major nuke down. But with Genesis Global, the possibility that they're going insolvent, with everything else that I spoke about today, we still don't know all the collateral damage from FTX. A lot could unfold here that could just nuke the market from where it is right now. So, only have funds that you actively trade with on centralized exchanges. Right, if you want to keep a little bit of your stable coins in your spot account on centralized exchanges to quickly buy up the dip, that's not a bad idea, because sometimes centralized exchanges can go ahead and take a long time to process your deposit into the exchange. So when we get that nuke down, the bottom is quick. So if you want to snipe the exact bottom, very important, have your assets in place beforehand, so that all you need to do is click a couple of buttons. Your money's already in place, and you can go ahead and buy what you want to buy. All right, so prepare now. We most likely get a huge nuke to form the bottom in the market. When I say nuke, I just mean a major sell-off, a very big red candle, right? We most likely do get that. We're going to see if Grayscale, goes insolvent and needs to dissolve their trust. With Genesis Global going under, a lot is still happening here, and we are still discovering all the collateral damage. So this was a long video, but I hope you enjoyed it. So in this video, we spoke about the collateral damage from the FTX collapse. We took a look at the Bitcoin and Ethereum price charts to go over where that possible bottom may come into play. Again, prepare now, get your money in the right place where it needs to be, so that you can quickly take action and buy whatever you want to buy when we get that major next sell-off. So I hope that you did enjoy the video. We also spoke about all the collateral damage that was caused by FTX going bust. And we're still only seeing the tip of the iceberg, so we'll see what does happen next here. We'll see who else goes bankrupt, insolvent, if Grayscale has to dissolve their trust. We will find that out very shortly. I hope that you did enjoy the video. If you did, make sure you let me know by smashing that like button down below. If you are brand new to Crypto Empire and you're not already subscribed to the channel, go ahead right now and smash that subscribe button down below and turn on all the notifications so that you don't miss any future videos. And my name is Connor from Crypto Empire, and I'll see you in the next video.